Carson said, Mike, I just need easy steps to place a covered call trade. Covered calls can be weekly or monthly, just need to get started. Can view videos if you recommend. Okay. First thing, let's do that, Carson, real quick. We're going to show some things here. When you go to the covered call screen first, a good place to start is you go to the Learning Center. As I mentioned at the beginning of the presentation, you can click on our YouTube covered call playlist. And this shows you various webinars related to the covered calls. This one here, the Swift Skills, you could ignore. That's sort of like a promo one for what is the best strike price, a quick 133 little thing with music in the background. Not a lot of meat and potatoes in that one. Calculating the best strike price for a covered call. In the money, at the money, out of the money. What's your preference? What are the risk rewards? This webinar is a good one for you. Risk rewards of weekly covered calls. Why use in the money covered calls as well? And then it gets into the rolling. What steps would I recommend to someone who's getting into power options and saying, I just need easy steps to place a covered call trade? Okay. Now, although it's as easy as I can make it, I always like to go a little bit more in depth to make sure you're as comfortable as possible. And one thing I'd want to suggest, Carson, is you can schedule a coaching session at any time, and we can go through that. We're not going to have a lot of coaching sessions available next week. I think there's not going to be any sessions available. I think Monday, I'm sorry, not Monday. I apologize, Carson, but Wednesday, Thursday naturally, and Friday. I don't think Ernie and I are doing any sessions there. You're interested in covered calls. You signed up for a 14-day free trial, and you say, I want to find covered call positions. My first approach, if you were on a coaching session, and you put in the note that you said, I need easy steps to place a covered call trade. Can be monthly or weekly. Just want to get started. Okay. Now, the easiest thing I can tell you is simply what you can do is just go into the monthly picks of the day view or the weekly picks of the day under the covered call screen. What are these picks of the day? Are they direct recommendations or suggestions? Not necessarily. What these are is similar to what you're asking, but in a different fashion. A member of Power Options was on a coaching session years ago, 4 or 5 years ago. Actually, wow, it's a little bit more than that now. I think it's 6 or 7 years ago. And asked her, and he says, well, you have all these tools. You have all this availability. You've been trading options since the 80s, and you opened this website for 97. Just tell me what is the best criteria that works in all different markets for a covered call or cash secured naked put. And Ernie said, okay. Using our back testing tools and, of course, actual trading, he went back in time. And this is, how did we develop these results? Sought trades that would make money with long-term in almost any market conditions with minimal management. So he set out for different criteria using the search tool with a specific target in mind, 10 to 20% per year, and using combinations of the stock technicals, options, settings, in the money, at the money, out of the money, delta, probability, high implied volatility, low implied volatility, medium implied volatility, and then the various technicals and fundamentals. He ran these 50 to 60 different iterations over a 3-year time period, was actually trading some of these different iterations in his account. And the results that you're seeing here on the covered call monthly picks of the day are the criteria that return the best return consistently over those time periods. And as you can see, they're slightly in the money. These positions are a little bit more volatile. Minigen, Cassava Sciences, Applied Optoelectronics, and they're showing a strong return if assigned 7%, 4.3%, 3.7% for a 28-out trade to standard December expiration. Now, this quick view is only updated once a day. This was from 11 a.m. Eastern Time. The results might have changed. There's also the weekly picks of the day for covered calls developed the same way. Now, Carson, is where we might get a little bit more in depth. But I want to get to a point where it's easiest for you. These might not match your personal risk reward tolerance. You might be asking me, where's Apple? Where's NVIDIA? Where's these things I'm hearing about in the news? They might not be matching the criteria, but what are the full criteria? Well, to see that, what you'd want to do is go into the search tool. So under covered calls, click on search. This is something we created last week, a just out of the money search. We're talking about out of the money covered calls. I don't have any testing on this. It was designed to show a customer who wanted to trade out of the money covered calls how to use the criteria. But the defaults are available, including the monthly picks of the day and the weekly picks of the day. So I click on weekly picks of the day, and it's not that different, although Cassava Sciences has dropped out of the top 3 from 11 o'clock this morning, and Ramaco Resources has taken it. Now, I know DigitalOcean Holdings. I know Goodyear Tire and Rubber. I know Mobileye because I think Ernie did a married put on that in the Fusion portfolio at Radioactive Trading. But these stocks, AppLovin Corp, don't even know what that is. I can guess. CRISPR Therapeutics I've seen. I've heard of Cassava. Some of these I don't know. What are the criteria that are being used? Well, we're looking for standard December expiration. That's why it's the monthly pick of the day. Minimum downside protection of 2%. Minimum percent of assigned of 0.8%. Range in the money of 10%. Why is that so deep in the money? And why am I looking for so little percent of assigned? And again, this is because after various iterations of the technical and fundamental criteria, what worked best? The in-the-money covered calls on a monthly basis over different markets. Yes, you can come to me and say, oh, but in the last 3 months I saw in that chart of 2015 to 2018, it looked like there was an 8% increase in the broad market from lower left to upper right. Your out-of-the-money covered calls would have made a higher return. Yeah, but you would have had larger losses and less protection in the other months when the market was bouncing up and down. It's a trade-off. What worked best with the minimal amount of management over consistent markets? That's what Ernie was tasked to do, and that's what came out. In addition to the option criteria, you can see the technicals that we're using. Basic average broker recommendation, looking for a buy, strong buy. Stocks above their 20-day moving average and a positive MACD signal, where the MACD is crossed above the EMA 9 for at least 5 days, and both the MACD and the signal line are positive. Stocks in a limited price range, you can change that because you might find other ones based on your account size, but also avoiding earnings between now and expiration, even with the 10% in the money range and a higher downside protection. Don't want any unnecessary surprises. But where are the bigger stocks? Well, the bigger stocks I mentioned, like Apple, Microsoft, Carson, and things like that, even if you're looking for maybe NVIDIA or Tesla, they're not in here because of that stock price limitation. Let's go ahead and jump that. Let's move it up to $500. But at the same time, I still have these sort of more volatile positions of some, biotechs, things of that nature, therapeutics. How can I weed that out to see more of the larger cap stocks that you want to see? Well, we can do that with some of the technicals and fundamentals. I can do the average stock volume, just a quick change. Now, this is measured in thousands. So if I only want to see stocks that trade on average 1 million shares per day, I'm going to put an average stock volume in of 1,000. And for the fundamentals, let's go ahead and put in a market cap. This is based in millions, actually. So, the large cap stocks are 15 billion plus, mid caps are 2 to 15 billion or higher. So I'm going to measure that, by putting in greater than 15,000. If I just wanted large cap, I'm going to look for mid to large cap only. So I'm going to put in a market cap of 2,500. Let me go ahead and submit that. Now, some of these stayed in there as well. But another way that I can filter this out, but we see some new names coming in, don't we? There's still Goodyear, there's still Mobileye, but now DraftKings, Stone, Shopify, Square. What do I see? These are high return positions that are great. 7% if assigned to going deep in the money in this case, but they have a higher implied volatility. So let's narrow that down. Let's say I want to put the implied volatility instead of those higher ranges, 80%, 90%, or 0.89, 0.8, 0.9, greater than 1. Let's put it back down to an average of, say, 0.55 or less for implied volatility. Now, what have we got? DraftKings, Stone, AppLovin still in there, Builders First Source, Roku, Shopify, Square, AMD, Shift4 Payments, don't know that one, Roblox, DoorDash, Pinterest. These are some more of the positions that would match the trend that we want, still match the return that maybe we want. But now this is where I have to go that next step on a coaching session, or would go the next step with you. This is what we found for mid to large cap stock that matched the trend that we'd want to see for Ernie's technical criteria that worked well. These would have been in the list beforehand. We didn't filter anything out. We just filtered it down to see more safer stocks with lower implied volatility, larger average stock volume. These all would have been in the list with those same other ones that we saw at the top of the list that had that higher implied volatility, thus the higher return. Now, a thought that might come to me during a session or in our conversation, you might say, well, I like these stocks, but if I'm doing a monthly, I'd rather have something closer to a 2 or 3% return. Well, it's give and take. These positions will have covered calls that are slightly in the money with a 2 or 3% return. However, they might not be 10% in the money. The AMD position, the stock at 120.62, it's been on a tear recently. I know because this is one of the married puts I have in the Fusion portfolio. We're selling the 105 call. Very conservative, 14% downside protection. The stock would have to fall 14% to 103.72 before we're technically losing money on the position. But it's a 1.2% if assigned for 28 days. Decent return. Fair return, conservative return. But to see something on these types of stocks that offer a higher percentage return for 30 days, let's say greater than 2%, I'm going to have to go a little bit less deep in the money. Let's go 7% with a minimum. Let's go 2.5. 2.5% return. We kept almost 90%, 80% of the initial criteria that Ernie had from his testing. We just increased the stock price a little bit to see some other stocks. We put in that average stock volume and mid to large cap, and now we're looking for a higher return with being less in the money. Of course, I don't know how these are going to pan out directly. We only get 3, Shift 4, Vertiv, and Roku. And that's the gamble of playing with the implied volatility. Let's put this back down to 2% so I get more of a wider range across the market. There we go. That's better. Roblox, Western Alliance Bancorp. Excuse me, folks. Roku is still there. Vertiv Holdings. Now, to be fair, one series does not the market make. We know that, Carson. But let me go ahead and click on Save Search. And we're going to call it Adjusted, Not Wrecked. Oh, I don't want to, by Ernie, of course. Monthly CCs. All right, let's go ahead and just save that search. Why am I saving the search, Carson? Well, as I mentioned earlier in the presentation, during the trial, we do have the availability of about 3 months of back testing. Let's see how what covered calls this search would have performed over the last 2 months. All right, so let me go to back test. I want to go to Smart History Excel. This works the same way as the search that we just did, but I can select a date back in time to run the search. I'm going to go as far back as possible. Oh, so it's not going to work. Well, it's going to give me October and possibly November. So we'll have 2 months, as I mentioned. But we want to do that adjusted, not recommended by Ernie, monthly covered calls. Let's go ahead and submit that search. So adjusted from September 18th. It'll show us October expiration when the results come up. I do apologize for the delay. It's usually a little bit faster than this, but right now in the background, we're uploading all of the historical data. If we ran that same search we just created, Carson, on September 18th, 2023, these are the 8 positions. CrowdStrike, DoorDash, Trade Desk. I'm worried about CrowdStrike. I think they had a decline during this time period. And as I mentioned, we're looking 32 days out to October expiration. Let's go ahead and calculate the group results. So this is from 9/18 to OCT expiration. CrowdStrike was actually profitable in those cases. So it was only 3 out of 6 or 50% were positive for an average return of minus 0.1%. Meanwhile, though, QQQ and SPX were down 4.5% and 5.4% over that same time period. Okay, now let's go back. And while we're here, so that would have been on October 20th. Let's go to the Monday following expiration, the 23rd. run our adjusted, not recommended by Ernie, monthly CCS. So our first cycle was only a 50% success rate with an average loss of 0.1%, while the markets were down 4.5% and 5% over that same 30-day period. On October 23rd, we would have only found 2 positions, Abercrombie & Fitch and CrowdStrike, that matched our criteria. Let's calculate those results. Oh, there we go. That was actually really fast. Positive return. So 2 out of 2, 100%. And we had an average of 2.5% return, right in a wheelhouse of our target. And the market was up 8% for QQQ and 6.6% for SPX. So overall, 5 out of 8 trades were successful. Average return loss of 0.1% in the first cycle and 2.5%. So we can call it a positive 2.4% gain. I guess what I'm going to do now. Again, 2 cycles does not the market make. Let's go back to September. Let's go to the 18th as we did before. And now let's pick the monthly picks of the day. Never hurts, right, to put our money where our mouth is. And we got some different. Abercrombie & Fitch is still there, but now we got Levi Strauss, Liberty Oilfield Services, Symbiotic. Same time period when the market was down 4.5%, 5.5%. Ernie's default monthly picks of the day. 4 out of 4 were successful for 100% and an average return of 1.8% compared to the 50% range with the adjustments I made. With the higher market cap, higher average stock volume, and the lowered volatility. And we also went lower in the money to get that higher return. All right. Now, next cycle, October 23rd, Monday following standard October expiration. Submit that search. Wow, same ones. Did that give me the wrong date? That looks too weird. I think I did the wrong, somehow it selected the wrong date first. Let me try that again. September 18th. Monthly picks of the day. I think it ran back to October 23rd. I can't believe it's the same 4 with the same return. Thank you. Wow. Sorry. So our October to November cycle would have been 100% with a 1.8% return. My apologies. Versus the 2.5% return with the changes I made. But that was in a strong market condition. Remember, 6.6. Sorry about that. I don't know what happened. Let's calculate these group results for that larger range from September 18th to October expiration. See some big losses here on 89 bio. But 73% success rate compared to a 50% success rate for the covered call positions. Average return of minus 1.7% for that cycle versus minus 1%. And we both had a 100% success rate, but the adjustments we made showed that 2.5% return, but that was a strong market condition. Again, you would never have allowed this, if possible, to go to that 48% loss you're seeing here. And you probably would have only opened the first 3 or 4 trades anyway. If this was an overnight gap where the stock fell from 17 to 684 or wherever it was at expiration, there's nothing you could have done about that. But we did start pretty deep in the money. But it wasn't enough. Something came out on that 89 bio. But again, avoiding those pharmaceuticals, we would have had less of a loss, but you still would have only probably taken the first 3 or 4 trades there. Seems complicated, but what did we really do? Let's go back to the search. We started off with a default criteria that Ernie's tested, and this happens a lot during the coaching sessions, Carson. Then we said, hey, I don't like some of these ones I'm seeing. Well, what do you like to see? I like stocks that maybe pay a dividend. I like to see more large cap stocks. I like a different price range. And I like to see good average volume, 750,000 average per day over the last 90 days or 1 million. We just made 3 or 4 subtle changes. And then maybe we would have customized the range in the money to match the return goals you were looking for. Now you've got a search. And what is important about this search? Across the entire universe of options, you've narrowed it down to just 10 positions for monthly covered calls with just a few clicks. And you know exactly why these positions are in your list. These are stocks that have that average stock volume, 1 million shares on average, that buy the strong buy broker recommendation above their 20-day moving average, positive MACD at least 5 days where both the MACD and the EMA 9 are above the divergence line. You have no earnings between now and expiration. Stock price range that you enter, greater than 2,500. Is every trade going to be successful? No. But, that's why we have management techniques. That's why we have courses on rolling, adjusting, and things like that, Carson. But that's the step. You could go very easily to the weekly picks of the day, the monthly picks of the day, and see that short view. The top 3 that came up based on Ernie's testing, and then you can go to your broker and place those trades. You want to do some more due diligence. Everything I always do when I find something in the search is I'm going to take a look at the stock chart. I have a way to, I want to look at what I want to look for on big charts. I'm going to look at the company information or news. Is there anything out there that might cause me hesitation in this case? I'm going to look at the research tool maybe to look at some of those option details we looked at, some of that implied volatility range. But as you can tell, most of the data I'd want would be selected in my columns. Now, if I like this position, I like the strike, comfortable with the downside protection, comfortable with the percent return, I'm going to go ahead and place the trade. And you'll get more faster and in tune to it because you know that, I only want to see stocks that are above their 20-day or 50-day moving average. You've got it. Narrowed down the entire universe to just those positions. I only want to see positions that, make sure I don't have earnings between now and expiration. You've got it. Yeah, we could always do due diligence, but it's there. You've set it. You know exactly why these results are appearing. You have the confidence to know that they're right, and you can set the search up any way you want to. Start with the basics, but if you don't like the results, you're curious as to why you're seeing things with a higher implied volatility, that's a quick view. That's why the picks of the day are there. But then again, go into the search, pull up the default criteria for that monthly or weekly picks of the day, research and analyze the positions, or say, I don't really know these stocks. I don't really know if I like these stocks. I want to see something. Well, there's 103 total results. Let's narrow that down. What makes you comfortable? Avoiding earnings between now and expiration. Do you want to put in a higher average stock volume? Do you want to look for that higher market cap? Do you want to look for dividend paying stocks? Do you want to adjust the implied volatility? This one's already there as well. That's how it is. And then once you've got your search saved, as we just did, we back tested a little bit with some confusion on my part, error on my part, it looked like. But then you just do some quick research analysis, stock chart, company information, anything in the headlines I should be aware of. You can delve deeper into estimates if you want to, and opinion indicators as well. Maybe take a look at that research tool for the options just to see some broad-based data. That's maybe a step beyond what you need to do. Sometimes I just like to look at it. And then, of course, you can also run your what-if scenarios, go to the profit and loss chart, see it graphically, and you can run what-if scenarios. What happens if the stock moves up 5 points in the next 3 or 4 days? What happens if it drops 5 points in the next 3 or 4 days? What would my expected loss be on the position using the calculate feature underneath the profit and loss chart? But again, as I mentioned, just getting started out, want a little bit more walkthrough, discuss what you like to see. What are you trying to do in your portfolio with weekly or monthly covered calls? Even if you prefer out of the money covered calls. I mean, this is just what Ernie saw worked best in those testing periods that he did and, further other testing cycles. But as we saw last week, we were discussing just out of the money covered calls, how to set up a search for just out of the money covered calls weekly based on the PowerOptions users and the question that came in, goals and what he wants to see, giving up downside protection for the potential of a higher return if he feels his crystal ball is correct and being neutral to bullish or more bullish sentiment going forward. So, okay, I'm sorry. As I mentioned, remember, you can just schedule one of those free coaching sessions at any time. Ernie, I guess, is doing some morning session on Wednesdays. I am not, and then you see it gaps right from Wednesday to Monday. So there's not going to be any sessions on Thursday or Friday. Next ones will be Monday the 27th, but we have availability on Monday, on Tuesday, and on Wednesday. You can schedule a time there. Again, that coaching session is a free 30 to 45-minute conversation with Ernie or myself. Okay? And we can go a little bit more in depth into what we did today or make it a little bit more streamlined as to help you with ease. Once you do some legwork, once you get what you want to put in there, once you find criteria with our help to adjust to make it comfortable, now once it's saved, you log on the PowerOptions, go into the search, you see the trades, you know exactly why the trades are there. You know exactly what criteria are being met. You can do some more due diligence with those quick links we just showed. There's your path, the easy covered call entry. Go to your broker, enter the trade as shown in PowerOptions, and then Come back to Power Options, put it in the portfolio as we showed earlier, track the position, set alerts in the portfolio, and if things start to go one direction or the other, you can start going to that position analysis screen to evaluate the rollout opportunities.